I'm George Macheras. I'm a partner at Watson Farley Williams in London, and I'm also the firm's global maritime sector head. So I'm delighted to be here today, and thank you to Capital Link for hosting us. I'm also delighted to have a very esteemed selection of panelists to join me in the discussion today. I'm joined by Dr. Ibrahim Al-Nadhairi, the CEO of Asyad Shipping Company, Constantin, Baack, the co-CEO of MPC Container Ships, Stratos Desypris, COO of Navios Maritime, Alex Eng, Vice President of Corporate Development and Strategy at Stolt Nielsen, and Andy Hampson, CEO of Tufton Investment Management. We're going to talk about investing strategies in maritime. And before I start the questions, I just want to set the tone a little bit, because I think we can all agree that the industry is at crossroads at the moment. We've had some very, very good years, from a financial sense at least, and from an operational and a commercial sense at least. Came at challenging circumstances with wars, trade wars, and literal wars, COVID lockdowns, country and international lockdowns. But this has had its impact, and it drove its path to shipping. And now some might say that the wider market is facing a real uncertainty, certainly since the start of 2025, the start of this calendar year. Some might even suggest that it's the end of the good cycle. So I just want to ask the obvious first question, and I'll address it to all our panelists. Is it still a good time to invest in shipping? And if so, why is that? And why should we be convinced to do so? I'll start, Andy, why don't we start with you on the basis that you're the furthest away from me?
Thanks very much, George. I'm pleased that you shortened the question to investing in shipping, because my normal answer is nursing homes in Surrey or shopping malls in Poland as to where best to invest. But I think we'll come on a bit later, because I know some of your questions, George, to actually saying why and how shipping should make itself attractive to the international investment community. And I think that that's an important topic. We'll cover that later on. So assuming we're starting in shipping, and I guess the angling of your question, George, is very much concentrating on assets, but I think I would just say, before moving on to answering that question, that there are many areas within shipping which are potentially attractive at the moment for an institutional investor, and be that shipping equities, be it debt funds, be it the services side of the industry, be it the venture IT development side of the industry. There are a host of areas that we can look at as being interesting areas for investing within the maritime industry, and that's one of the things we look at Tufton. But concentrating maybe more onto the actual physical assets and looking at the different sectors, our view at the moment is that we are mid-cycle across most of the key segments of shipping. Not saying there won't be individual pockets of sub-segments which might be slightly outperforming the average, but across tankers, dry, containers, gas, I think we're very much mid-cycle. We look at mid-cycle as being where the values are, second-hand values are in line with the depreciated replacement cost of those assets, a Tobin's Q measure for those of you who are financially orientated. And we are roughly mid-cycle across all of those sectors. The question is the next move up or is the next move down from where we are today? And I think from an investment perspective, what you want to look for, as well as where we are from a pricing mid-cycle, is what the yield and capital returns are across the different sectors. Because where you've got a higher return scenario on a mid-cycle value asset, you can pay that asset down quite considerably. And I think there are opportunities there at the moment in the container sector, where although mid-cycle you can pay down with charters which are available, and in some of the tanker and product tanker sectors. Our view at the moment is that it's not there at the moment in dry and in the other sectors. So that's my brief answer.
That's good, thank you. Just an observation on that. I mean, you focused on second-hand assets, but the fact is that the new building order book is still quite up and down. So it would be interesting to see if Alex, you have a view on that, or anything else to add to what Andy mentioned.
I guess just to add, we also support this thesis around it's a good time, continues to be a good time to invest, but it must require that discipline and that strategic view, be it either on a sector basis or a disciplined view on a particular part of the asset cycle. We believe the market uncertainty isn't necessarily just a headwind, but also provides that opportunity that we have. I think a good example is looking at the Stolt Nielsen share price, or many of the share prices in the room today. At Liberation Day, Stolt Nielsen was at 200 kroner. Today we're at 350, with a not fundamentally different outlook on the market that we have today. And I think that really is a good example of what opportunities can be had, be it in the playing in the equity markets as well as the assets that can be seen. Stolt Nielsen, we're not a speculator, we're an industrial shipping provider, but we take that long-term view, but fundamentally we believe in the strength of the maritime industry and also the chemical customers that we serve.
Thanks, Alex. It's interesting because both you and Andy have identified certain subsectors which you think are still very interesting in investing in, and that you still see a lot of value in doing so. Stratos, turning the question to you as the CEO of a company which has owned or owns a very diverse fleet. What's your counter to that, or your supplement to that?
I would agree with the two colleagues that spoke before me. Shipping is still attractive, but is attractive selectively, on selective asset classes and on selective segments. Basically, we have seen shipping has been cyclical. We have seen a qualitative difference on how the shipping industry has been operating. I mean, in the past, it was basically the cycles were defined by the business cycles. Today, what we see is that this has changed, and shipping is mostly affected by global geopolitical and macro events. And what that means that we had the pandemic, we had the wars in Ukraine and the Red Sea closure. We have the tariffs, which is a very recent event. What that means in terms of supply and demand, because this is actually what makes shipping volatile and the values going up and down. On the demand side, the rerouting that we have seen increased on-mile demand. The rerouting that we have seen of commodities, for example, the Russian oil has increased average duration by 30%. Same on the Red Sea, on the container ships, we have seen that Europe to Asia trips have increased by 10 to 12 days due to the rerouting on the Black Sea. And also we have the decarbonization rules that are coming very aggressively into effect, and this affect very much asset prices, but also affect the fleet in terms of the older tonnage that is becoming more and more uneconomical. Now, on the supply side, as I said, certain segments look very attractive. We have tight fleet characteristics. On the dry bulk, we have an order book that is about 10-11% of the global fleet. Same goes on VLCCs, approximately. And at the same time, we have a global fleet that is aging. On these two specific segments, on dry bulk, we have around 30% of the vessels, more than 30%, that is over 15 years of age. And on the tankers, this goes to over 45%, which is over 15 years of age. So these vessels, they are becoming more and more expensive. They have compliance issues with the new regulations. And of course, they drive the new vessels to command a premium. So in short, what I would say is that, investing in shipping is complex, we all know that, because you have to time and you have to understand what is the impact of the global geopolitical events and the macro events, and also how decarbonization is going to affect supply and demand. But for us in Navios, having a diversified fleet provides us a very good flexibility in investing, provides us a resilience in the business model, and also mitigates the risks and the volatility of the market. So I think we are in a very safe place for shipping and selected shipping companies and selected segments going forward.
I can understand that. Just out of interest, picking up something that you mentioned, the aging fleet is a real issue. I completely agree with you. On the other hand, we've heard so far that the opportunities are in the second-hand market. So just a quick note on that, just an explanation for some of us. When you say you've got an aging fleet, which is an issue, but then you've got opportunities on the second hand of that aging fleet market, how do you actually marry the two up? It can be, to be fair, any of the three of you who have already spoken can answer that question. So.
No, because I was referring to that. Let me start with that. The aging fleet, whatever is 15 years and old, it's not considered eco vessel, as we like to call it in the shipping industry. So basically, a non-eco vessel today, you have specific penalties, I would say. We have the EU regulations, the Fuel EU, the EU ETS. These are regulations that penalize vessels that are fuel consuming, that are more heavy on emissions, and this increases operating costs, and at the same time, you have a premium, I would say, on vessels that are younger. So new building vessels, of course, they all come with eco characteristics, but also vessels that are, I would say, built over the last 10 years, that are now entering the fleet. These are vessels that command a premium compared to the older tonnage.
Thank you, that's helpful. Constantin, container ships have already been mentioned as a great investment opportunity, even though it's just the first question. Do you have anything to add to that? It will be...
Yeah, I think I agree. Let's start with that. I agree. I mean, over the last couple of years, obviously, sectors have developed quite differently. And if you just look at the headlines, geopolitical risk, regulatory uncertainty, and you name it, high asset prices, I would actually say we're more on the higher end of asset prices historically. So I think all these data points would suggest rather not to invest, because it's obviously a environment characterized by uncertainty and considerably high asset values. But, and there I agree with what Andrew said, in particular on the container side, you can de-risk that through charters. So you can, even though you're in a rather higher asset price environment, you can de-risk the investment by attaching a charter and have a basically de-risk investment. I think that's true for second-hand ships, but that's also more and more true for new buildings, because, and that's the positive side of things, the good markets have also led to very good balance sheets across industries, and in particular in the container market, where our customers, the liner companies, never had balance sheets that are as strong as they are today. So I think to team up, to partner up, even in a high market environment, can be a very attractive investment as a company. And eventually, a fleet renewal exercise is something that needs to be done over the next 5, 10, 15 years by everyone who's there for the long run and who takes a bit more of an industrial view on the industry. And I think many win-win situations can actually be created at the moment. I'm sure we'll dig into the intricacies of the different sectors later on, but I do think it's still time to invest. I also agree that one should be a tad more selective. And I think what is very important in this market environment to have investment capacity, because volatility is here. So whilst there are certain strategic investments in terms of fleet renewal, etc., that can be done, there will be a time where you can also more opportunistically act again. It's probably not now, because prices are still more on the higher end of the range, so you need to have a good de-risking attached to it. But going forward, I'm sure there will be more opportunistic investment opportunities as well, and that's, as a company, it's important to maintain significant investment capacity.
Thank you. Ibrahim, anything to...
Well, for me, it's, as always, you know, shipping is quite dynamic. And we know that it's a cyclical business as well as, but then to some, maybe it's the end of a good cycle. Personally, I don't agree with that. I think it's a transition period. Well, when you look at it from supply side, there's still historically low demand, low order book, especially when it comes to, comparing that to the high tonnage high oil tonnage that needs to basically exit the market. Mainly because of regulation and decarbonization. So that fleet needs to be substituted, and still the low order book doesn't really match that change. There's also, in terms of the demand side, the trade continues to evolve. There's requirements, the world requires more commodities. There's a lot of things that needs to be connected to different parts of the world, and the shipping is in the heart of it. So for me, I think the way it should be taken, that for investors mainly, it's maybe the time is not to chase the last wave of high rate, for high rate cycle. Rather than that, it's basically maybe to be, as my friends here said, we need to be more focused. We need to be into more disciplined and also look into our future demands. And that is basically to capture the real value of our assets, and to ensure that these assets are modern, they're efficient, and they're compliant to the new requirements and to of course, the existing requirement as well. And then to also remain competitive with these assets as the regulation tightens as well. And there's also, we could see now, recently, there's also a customer shift towards sustainability. And that is something that wasn't there in the past, because people in the past, they were mainly used about how much this thing is going to cost me. Right now, know how safe and how compliant is this commodity is. So the question, back to your question, is it a good time to invest? Well, for us in Asyad Shipping, we think it's absolutely the right time. Of course, maybe with the proper de-risking, as mentioned by Constantin here. But if you're looking for something that is beyond the short-term noise, then it's the right time to invest. And it's basically the time to position yourself as an investor within the market and basically to ensure where the industry is heading.
Okay, thank you. So if you take a step back, say you're an inexperienced, you're an institutional investor, but you don't have a lot of experience in shipping, you're new to the industry. Arguably, an easier way to get into the industry would be through public markets, and I think Andy specifically mentioned, for example, shipping equities, public companies, and so on and so forth. So I guess the question is, how do you manage the investment appetites with such investors in terms of what expectations they actually have, but also from your perspective, what you're looking to get out of that investment as well, beyond just the capital that is being invested? On the basis that the two very common jurisdictions when it comes to public markets in shipping is Norway and New York, I'd like to address that question first to Alex from a Norwegian perspective, and then Stratos to you from a New York perspective. Alex?
Yeah, thanks, George. I guess most importantly, we really recognize that when a shareholder chooses to invest in us, they've given us our capital and they expect a return for that capital. It's stating the obvious, but it's front and center of our minds. Secondly, it's really important that any investor has really clear alignment on what our strategy is. At Stolt Nielsen, we have a long-term commitment to grow our EBITDA. That means we can use that EBITDA to make more investments, to pay our debt services, and also make dividends. We're very proud that we've consistently paid a dividend every year for over 2 decades, giving up $1.3 billion of cash to shareholders. That track record really demonstrates that a belief in investing for future cash flows does also represent a good strategy for shareholders as well. There's always that tension, but we hope that when they place their trust in us, that they trust in the strategy that we have in that regard.
Thank you, Alex. Strato?
From my perspective, I have been an officer in a public shipping company listed in the US for almost 20 years now, so I can share my personal observation, if you want, on what an investor ought to be seeking when investing in shipping. What we have seen in the past, and we have seen a shift on the investor base, investors were trying to time the market, so they were jumping in and out of shipping stocks, trying to measure the underlying fundamentals of the market, and the reality is that very few of them wanted to own a company through the cycle. And maybe it was for a good reason. Many shipping companies faced financial difficulties over the past, mainly due to extreme leverage. And I think that now we have learned the lesson as an industry, and today we have seen that the majority of the publicly listed shipping companies has very strong balance sheets. I think these are the balances that it's the strongest that we have ever seen. So as an investor, if I was an investor on a shipping company, what I would do is I would seek for a company that is diversified, operates across multiple segments, several asset classes, and is operated and managed by a conservative group of professionals. Because after all, our main task in shipping is to manage our risks. The volatility, the extreme volatility that we are seeing in shipping, it will definitely bring plenty of opportunities. So our job is to manage this risk and be there for the opportunities. So I would invest in NMM, personally, no bias.
A shipping company starting with N. Andy, I think you wanted to add something.
Yeah, very disappointed, George, that you didn't include London in that summary and asked me about Tufton Assets Limited, which was the first investment trust to be listed on the London Exchange, running a diversified fleet of assets. So it shows it can be done in London. The investment trust sector actually happens to be quite conducive to the type of asset investing that we do in a publicly listed vehicle in London. And actually it's cheaper listing than in Oslo and definitely than in New York, and a lot less regulation. And as Taylor Maritime was there as well, but they've now moved into a full listing in London. Having said that, they've agreed to sell most of their ships, so I dare say there'll be some nice capital returns there. But our investment trust yields a 8% yield, it's trading at mid-teens discount to NAV, so great opportunity. It is there.
It can be done, but it's less common, I guess, although you've obviously, both you and Taylor have demonstrated that you've done it. So I guess two questions. The first one is, how do you manage investors who are less experienced in shipping than, say, Norway? And as a man who's taken companies public both in London and in Norway, I'm going to ask you the flip side, why go private? So take either of the questions in whatever turn you want. For you, Andy. Yeah,
For me, why go private, or how do you handle the investors?
Both.
Well, I'll try and handle how do you handle investors. Yeah. I think the vast majority of our investors in Tufton and Tufton's funds are non-traditional shipping investors. So they're not the normal guys who are going to be invested in the Norwegian exchange or in Navios. These are tending to be pension funds, asset managers, institutional asset managers. It's a hell of an education, is the brief answer, George. And it's only taken me 25 years, and I haven't quite got there yet. So I mean, it's a difficult, long trail to actually go down. But I think you need to get the trust. You need transparency. Particularly when it comes to fees and particularly when it comes to any ancillary businesses that may surround the fund. And I think if you have that transparency and over time you gain the track record, then you get the confidence of the investor base without them necessarily having to understand the minutiae of the deals that they're actually investing in. They're giving money to you, or in our case for Tufton, as an investment manager who is experienced in that sector. You are the one with the experience in the sector. They're looking for your lead, and I think as long as you have that transparency and the track record, that then they're happy to leave the decisions to you. Is it a tanker or is it a container ship? They're not bothered about is it a geared container ship or a non-geared container ship. That's far too much detail. These guys are maybe looking at transport being 5% of their total portfolio or something, even less. They're looking at shipping as being, maybe 10% of their total transport portfolio. You're right down the very, very end of the spectrum. So you haven't got time to explain it to them. So you really have to sell it on transparency and track record and performance.
Thank you, Andy. And actually, something that is quite a common thing from all your answers so far is that when one does decide to invest in shipping, whatever strategy they decide, the two most pertinent questions and the most obvious questions that they need to answer is the first of all is what kind of subsector you're going to invest in, and obviously there's been views on this panel about which ones make the most sense at the moment. The other one is a jurisdictional question, which is what region, what country, be it London, Oslo, New York, and everything in between makes the most sense. So I'd be interested to hear your views, Ibrahim, based in the Middle East. What's the Middle Eastern outlook on shipping, and why is the Middle East attractive from a shipping perspective to investors?
Well, if I may use maybe our company as Asyad Shipping, we are quite a diversified shipping company. We're active in 5 different segments. And we see that specialization, it played a major role in our expansion and in our investment into shipping. But then this comes with mainly, as you have rightly said, the focus and the jurisdiction, the asset class, and as well as trade lanes. That being said, of course, there's this nature of specialization is also evolving. It's now less about geography and alone, of course, and it's more about the alignment of the subsectors in terms of their resilience, in terms of their competency or the future proof, as well as the compliance and efficiency, of course. So we've seen that over the years that the investors, and especially for us as a public listed company, that investors are increasingly drawn to LNG, shuttle tankers, as well as maybe modern feeder ships, yet not the freight cost or the freight rates or the freight dynamics by themselves. And that is mainly because of these assets. They fit more within the extent of energy transition, and that is something that is very demanded by the shareholders. There's also the global supply chain realignment, as well as the attractiveness of the dual restriction of where the investment is made. For the Middle East, we've seen that there's a lot of regulation are coming up. The Middle East is picking up a lot in terms of the shipping industry. A lot of major shipping companies are coming up in the Middle East, whether to start with like in Oman or in Saudi Arabia and in UAE, as well as we've seen also the vast expansion of the Qatari fleet, and there's also in terms of the KOTC in Kuwait. So there's a lot of these companies that are actually expanding, and that is basically because of the right environment or basically investment environment in the region.
Thanks, Ibrahim. And actually, looking at it from a different perspective, that of the actual segment, Constantin, as a company that specializes in container ships, do you see that appetite for specialization still being very relevant when it comes to strategizing in your shipping investments?
I mean, first of all, maybe I'm taking up the point of Andrew earlier on the investors, because one is obviously our own view, the other is the investors, and some investors are probably happy to provide an asset manager with the capital, and for the asset manager then to divest in a invest in a diversified fleet. I mean, we are talking a lot to investors that are very firm on their sector view. So they want to choose the sectors themselves and want to make sure, you know, today I go into containers, then I go into tankers. And I think this is just a different type of investor one talks to when looking at specialization. Maybe that's a starting point from an investor standpoint. And of course, then for that matter, I'm talking a lot to people who take a long or sometimes even short view on the container sector and want to understand the strategy, the intricacies of the sector, etc. I mean, I think that's the starting point in different investors who take a different view and who want to be maybe a tad more detailed in their analysis on the specific sector rather than on the industry. Secondly, specialization, in my view, is extremely important these days, and I would actually argue size matters. Size matters not in terms of the bigger the better, but you need a certain minimum size of fleet, certainly in the container sector, in order to have a relevant number of data points and a relevant number of interaction with your key customers and clients. We have over the years done new building programs for our clients. We have done more than 30 retrofit against charter renewal programs. We have done less for longer charter arrangements. We have bought ships in the market where we could pay a slightly higher price because we had already secured the charter against it. And that you can only do if you have a certain number of vessels with the big liner companies, and that you have a more industrial view on the industry rather than just buying low, selling high, because that's something that might be possible in some markets. In a market as we have it today, you need to have a structured approach to investments, and that means working at least to a large extent hand in glove with your charter customers in achieving the right outcome. And we have done that recently in form of new buildings, where we have been able to secure a 3-year time charter for 4 new buildings that is basically de-risking the investment to a significant discount to new building parity, meaning the new building price line being depreciated down to scrap, and after 3 years we had 40% discount. So that, I would say, even in a high market environment, is a very attractive investment, is a good investment. It is further bonding with your clients because you offer them something that they need. And I think therefore specialization is important. The world is more complex. You need to know your customers, and the customers need to rely on you in a high market and in a low market. And that's why I think specialization will still get the extra premium, both for the company, for the customers, and also for investors.
Thank you. And actually, if I could stay with you, Constantin, because Ibrahim mentioned energy transition, and you also mentioned about you alluded to certain things like retrofits and other initiatives on that. So with that specialization, do you feel that certain segments, especially when it comes to energy transition or decarbonization in shipping, do they get, fairly or not, do they get an advantage or a disadvantage?
I would say that everything that is logistical shipping, meaning predictable trade routes, such as containers and to quite some extent also car carriers, for example, do have a benefit over commodity shipping like tankers and dry bulk, because there's a certainty and predictability of trade, and hence there's a an easier buy-in by the charterers, the cargo side, and the owners. And just one example, we have built dual-fuel methanol vessels for a specific trade, going basically Rotterdam up the Norwegian coast on a 15-year time charter, where we have a 15-year COA, which in container shipping is almost unheard of. And we have been able to bring together the cargo side, the charterer, and us as an owner to order a ship, to base that on a, let's say, decent risk-sharing basis by having, 15-year visibility, and therefore being able to invest also in new technology without assuming too much risk, neither for the cargo side, nor for the charterer, nor for us as an owner. So I do think there are certain sectors that have a better constellation when it comes to cargo, charterer, and owner to be first movers. Whether that's, in the long run, the better outcome, time will tell. But I do think that logistical shipping with more predictable trade routes is certainly the easier sector to take a leap towards decarbonization and executing investments of that nature.
Thank you. Ibrahim, you mentioned, as I said, you mentioned energy transition. Energy transition has been, the interest in energy transition in shipping fluctuates, but I think it's always a relevant topic and always something that people ask. I dare say the perception, perhaps unfair, but the perception has been that it's been quite a Eurocentric concept and it's been less relevant in other parts of the world. Is this changing? Is this becoming actually a much more uniformly global consideration?
Well, good question, George. Basically, decarbonization is not purely a Eurocentric discussion, of course. Now maybe it started from here, of course, but then this is a global imperative. And there's a clear shift that a lot of jurisdictions, they are shifting towards decarbonization. For example, Asia and MENA region, Middle East, mainly, and North Africa, decarbonization forms part of their momentum. It actually, when you think of it, ship owners, ship charters, financiers, as well as governments, they're all working within decarbonization sort of framework. I'll give you an example. For example, Singapore, a green shipping lane. That is a good initiative. It shows actually how decarbonization is important. When you think about Korea and Japan, they're taking the leadership when it comes to basically alternative fuel. There's the Middle East itself is also into, they moved from just being the exporters of oil and gas and energy into also investors of alternative fuel and methanol, as well as other stuff. There's also, when you think of China, China has invested a lot in terms of enhancing its green shipbuilding capacity. So when you think about all this together, you can see that the intensity of decarbonization may ebb, but it's basically, it goes within the market condition, but then the direction of travel is one way, which is decarbonization. That is now embedded into the Middle East, mainly, and I say Middle East, because I'm involved in some of these things. It is involved or embedded into the Middle East strategies and decision-making plans for the future.
Thank you. Playing devil's advocate, I certainly hear what you say about Asia and the Middle East. Looking at the other side of the world, the current U.S. administration has been very vocal in its opposition of decarbonization. So a blunt question is, how relevant is it really to external investors, and how do we as an industry answer the assertion that this is just pretense, particularly when it comes to maybe the U.S. public markets or the U.S. dollar designated public markets, or indeed the private markets? Strato, why don't we start with you?
Yeah, I mean, first of all, we have to, somehow distinguish the political overlay from the reality here. I mean, decarbonization is a very important topic, but it's all about technology at the end of the day. There is no magic solution nowhere in the world that will allow us to decarbonize immediately. So this is something that, we are developing the appropriate, we're developing the appropriate technologies and solutions in order to proceed to the decarbonization. However, this is something that we're not there yet. So although, on certain parts of the world, especially in Europe, it's a major topic, in the US it starts to somehow subside, I would say. the current administration, I think, does not give so important a role on the decarbonization efforts as it used to be in the past. But we still see, because shipping is operating globally, we're not operating just in one region, so we still see the commercial pressure from the decarbonization efforts. We still see charters, changing and integrating the environmental regulations in their decision strategy. And as I said earlier, we have the new regulations in Europe, EU ETS and Fuel EU. These are changing the way that charters are selecting their vessels. And don't forget that in October, there is a lot of debate on that. I mean, the IMO is supposed to vote on stricter gas emissions measures and maybe more aggressive targets for 2030 and 2040. And reality is that the technology for that is not there yet, but this is expected to have a significant impact. So what it happens from an investor perspective is that what we see is that decarbonization definitely has a significant impact on asset values. It has a significant impact, as I said earlier, because you have, again, a phasing out of the older vessels. They are struggling, they are more expensive, they are struggling to comply with the regulations. So they are not, I would say, preferred by the charterers in order to be deployed. We have a premium on the younger vessels, as we mentioned earlier. And investors should seek to a platform that is able to take advantage of this transition so it can create additional value for its shareholders.
I agree. Obviously, the international nature of shipping is such that it lends itself to that kind of decarbonization efforts. I will counter to that the money still has to come from certain places and the investor pool. Even actually in countries like Norway, which as a country has always been very vocal, the opposite way of the US at the moment, which is towards a green transition, towards a green shipping, yet, and maybe my Norwegian friends in the audience will be upset with me for saying that, fossil fuel investments have traditionally, in the last few years, have been very, very successful. So again, how do you counter that, Alex, from your perspective in Oslo?
I think it's really important to recognize as an Oslo-listed company that all shareholders, and particularly the institutional investors, really require clear ESG policies, clear targets to achieve the regulations that are required. And the reason they do that is it's not just a cost to the industry, but it's also that competitive advantage if we do have a plan to try and tackle it. And as we've talked about here, some technology still needs to be achieved in order to fully get to the long-term strategies. But I think it's important that you have at least that runway clearly set out to your investors. But it's also important that our investors are focused on the duty that we have to optimize our earnings today. The two aren't mutually exclusive in how we can tackle them together. The most environmentally friendly fuel you have is the one that you're not using. So that's why we employ a lot of efficiency-saving devices. The retrofitting that you talked about, our ship management is laser-focused on that operational efficiency element, which is both good for the environment and really good for our bottom line as well.
Thank you. Andy, just on the private side, when you've got private institutional investors buying into oil majors and telling them to stop investing in green energy and go back to oil and gas, how important really is it to the private investor?
I agree totally with what has just been said, particularly on the energy-saving devices, and also that we don't have an immediate solution to the decarbonisation. And I think there is a growing realisation that, particularly for shipping, that solution is not present yet. But having said that, with institutional type investors, large asset managers, pension funds, the ESG criteria is still very important. But I think maybe what we often miss is that everybody only talks about the E. They forget about the S and the G. And I think that the S and the G are maybe becoming slightly more important, or at least their relevance has been raised more, given that we know there are limitations as to how far we can go on energy-saving devices before the fuels are available for the industry to decarbonise. And so I think that those sort of social and governance areas are areas that we see in a lot of private investors as actually being maybe more important, maybe slightly to compensate for the knowledge that we can't necessarily do the E bit in its fully fledged way at the moment.
So the E is not overshadowed by the S and the G, but it just takes a different.
I think it just takes a different perspective, and you're right. I mean, geographically, clearly there is There is, you know, the leader of the free world has changed things quite dramatically in how we view the environmental issues. So, yeah, it's different in different geographies.
No, thank you. I think we've got time for one more question. So, as a lawyer, I tend to ask the pessimistic questions to end because we sometimes like to find a problem for every solution. But I'll do the opposite, and I'll ask the question to all of you. In a few words, in the midterm, what's the biggest opportunity in shipping for a new investor or for an experienced investor? Ibrahim, I'll start with you.
Well, I'm a great believer that the future of our industry basically belongs to those who power the energy transition and embrace digitalization. That is how I believe it.
Constantin?
Yeah, I agree that the energy transition is the biggest challenge, but it also creates the biggest opportunity, and that is twofold in my view. Firstly, you can form strategic partnerships. I know that very much from the container side, but you will also see asset price dislocations as a result of that, and hence you will also have very opportunistic deals that you can execute in the midterm.
Thank you. Strato?
Actually, I would differentiate a little bit. I think that you know, the medium to long-term opportunity for shipping is not going to be based on supply and demand. It's going to be based on technology and how technology will reshape the way that our industry operates. I mean, you know, shipping has been very slow in adapting digitalization, but this is changing fast. So we have artificial intelligence, you have digital platforms, you have advanced analytics that they already play a significant role in how we optimize our routes, how we measure our emissions, and effectively they have a direct impact on our efficiency and how the companies are operating in terms of their bottom line. So I think medium term, this is going to be the significant opportunity for the
Spoken like a true Greek engineer. Alex?
I'll quote Warren Buffett. Be fearful when others are greedy, and greedy when others are fearful. So, i.e. invest counter-cyclical if you can.
Andy?
I think we mentioned the supply side briefly. Shipbuilding capacity is rising. At the moment, there is phenomenal need for fleet replacement across the area. Maybe a bit left field, but have you ever thought of looking at shipbuilders?
Great, thank you. That's it, and I'm convinced. I'm signed up. Thank you, everyone. Thank you.
Thank you very much.